heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we go live to the White House to speak with Heather Boushey of the Council of Economic Advisors, her take on today's CPI print and the impacts of the Inflation Reduction Act.
Plus, Alphabet loses its antitrust fight with Epic Games as a federal court jury in California rules Google Play is a monopoly. We'll break down the impact of the antitrust ruling.
And space surveillance startup True Anomaly raises $100 million in its latest funding round to ramp up output of its satellite that can track national threats in orbit. We'll discuss with that and so much more throughout this hour. First, let's check in on these markets. And while the initial threat over the CPI print just running ever so slightly hot in one particular point in the margin, generally has died down, and we see a 0.2% up on the NASDAQ. No great shakes. We're seeing the two-year yield completely flat, having originally just spiked higher. We come back down. We breathe what seems to be a bit of a sigh as people take on board the fact that really CPI is ultimately slowing, but still some areas are concerned. Maybe it be rent, maybe it be, of course, the cost of your cars. We'll dig into that in a moment, Ed. I'm looking at the Bloomberg dollar index, just off by about 0.1%, having initially pushed on higher. Let's look at what the ripple across effect is from the US dollar to crypto. And really, Bitcoin has been carving its own path for the last few weeks, but notably it is still way off that almost $45,000 level that we were hitting. We're at 41.2930 as well. 41,293 is where we currently trade, just treading some water after the big macro print. All eyes, and of course, the Fed tomorrow, Ed.
Oracle is the big earnings story that we're watching. 25% top-line growth for the data center business in the quarter gone. That sounds like a big number, but the way the market's looking at it is that it's the second consecutive quarter of decelerating growth, the opposite of what they wanted to see, particularly in the context of the AI boom. Down more than 11% in the session. That puts it on track for its biggest drop since mid-September. A lot of concern are on the infrastructure side. Were they getting enough access to high-end GPUs to build out infrastructure in support of artificial intelligence? Then there's our top story, Google. The jury here in San Francisco basically saying Google Play is a monopoly, and that is based on anti-competitive practices by parent Alphabet. The shares under pressure, down 0.8%. Our colleagues at Bloomberg Intelligence are basically saying if the next step is the judge deciding that there needs to be a policy change on the Google Play store, in other words, you can spend money in a different way and download apps outside of Google Play, that could be a headwind of 1 to 2 percentage points for growth to Alphabet going forward. We will dig in very deeply to that story later in the program.
Yeah, and be fascinating to ultimately see how some of the costs, that 30%, comes down. What does that mean for the cost of doing business? We've got so much to discuss with this inflationary environment. Core CPI, let's get back to it for a moment, Ed. The data there coming in today, basically matching estimates and reinforcing bets that the Federal Reserve will have to keep rates elevated to tame inflation in the longer term. But in the here and the now, we just try to really understand where we're dialing back on inflation. We want to get the view from the White House, Council of Economic Advisors to be precise. The member is Heather Boushey. You join us now. And look, consumer prices in general, the print came in, well, where the market had seen it. The headline ticked above expectations on the month-on-month, just ever so slightly. But Heather, what was your read on today's print?
Well, certainly, as you noted, the headline was a bit above market expectations. But when you look at the whole report, you see that the pace of inflation, in various parts of the report has been coming down in ways that are really important for consumers. So, for example, the pace of inflation for groceries are slower than they have been in over a year. That is consistent with news that we were talking about right after Thanksgiving, where the price of a Thanksgiving dinner was cheaper this year than it was last year. And as we look forward to the holiday season, you see that some goods that are going to be important for families, sporting goods or toys or things that they might buy for Christmas like televisions or whatnot, those prices have also, the pace has also slowed there as well. So there is some good news for consumers in there. And when you look over the last quarter, the annualized rate of headline inflation is about 2.2%.
I would say, though, a lot of consumers don't feel it. Now, you've rightly pointed out that consumer sentiment has been picking up in December. It was up about 13%, I think. Inflation expectations, they've been dialing back. But, well, to use on the day that we get yet another word of the year, one word of the year has been this Vibe session. And the feeling is that people don't feel great, even though the economy seemingly is going pretty great. What do you say as an administration when that hits hard on a consumer that doesn't feel the way that you're currently talking about this economy right now?
Well, let's be very clear. The president's been clear. His economic team has been clear. We understand that high prices have been hard on families and that this has posed challenges. Pocketbook questions are really important. It's one of the reasons why when I looked at this report today, we see actually that wages have now been increasing faster than the pace of inflation for 7 months now. And we know that it takes some time for things to, for people's perception of what's happening in the economy to resonate. We're hopeful that as we see wages continue, hopefully to outpace inflation, that'll help people be able to get their family budgets back under control. The other thing we see, of course, is for the 80% of workers in the economy that are production and non-supervisory workers, so not the managers, but the production and non-supervisory workers, they have fully recovered their real wages back to where they had been pre-pandemic. So that's certainly good news, but we know that the path to recover from this historic, virus-induced recession that we had and all of the challenges that we had getting back up online and the supply chain challenges, so much work went into making things function again in our economy. And hopefully as people go into this holiday season, they'll see that prices that the pace is not as high as it was last year, and that'll help with consumer confidence over time.
Heather, thank you for your time. It's Ed here in San Francisco. Our technology audience, its workers, just have one very simple question. What specifics, what areas are you seeing the Inflation Reduction Act have a substantive impact in lowering inflation? In other words, are there any specific data points you can give us that show the IRA has worked?
Well, let me just focus on one today. So we saw in today's report on inflation that the price of new cars has fallen for the past 2 months. And in fact, actually, it's fallen for 4 out of the last 6 months. And one of the things that we've been tracking very carefully because of the Inflation Reduction Act is what's been happening with the U.S. auto industry as we've made these historic investments in batteries and in electric vehicles. And of course, we've seen that the number of electric vehicles has been rising. And we see that actually the price of those cars, because there's now more competition, has actually come down. So now the price of an electric vehicle is about within $3,000 of a car. Then that's before the tax credit that families can receive to buy those new electric vehicles. So that's one place where those investments are helping to bring changes for consumers and families while also creating good jobs here in the United States.
In that case, Heather, what is the White House's reaction to the news overnight that Ford has cut its production target for the F-150 Lightning by 50% for 2024? And what they're saying is they're simply matching their output to what they see as being consumer demand.
Well, I can't comment on that today in the details, but we are seeing these historic investments. As a result of the Inflation Reduction Act, we are seeing these this uptick in sales for electric vehicles that we've seen in the past. Of course, it is challenging to reshape an entire economy, to build a new clean energy economy, but knowing that the president has done what he could do, working with Congress to be able to make sure that businesses have the support they need to be able to make these investments. That's where our energy has been focused.
There is, of course, that tension that ultimately inflationary pressure hasn't been helped by geopolitics, by trade in particular, by the fact that we are having to slow, in some ways, the supply chain between the US and China in particular. How much of a help or a hindrance is that, particularly at the moment when we think of what's happening in the chip sector?
Well, let me just say a couple of things. When you look at the pace of inflation, and if you were to overlay price changes along with changes in what has happened in the supply chain index that we look to, you actually see that a big part of why we've been able to get prices down, right? They were at their peak 9.1%. Now we're at 3.1% for headline inflation. When you look at that shift, a lot of that mirrors these challenges that we saw in supply chains as an outcome of the pandemic. And as businesses had to get up and running, and yet there was still this virus around the world and it upended these global supply chains. All the work that the president did to make sure that goods were able to be transported, to make sure that the ports were working, that played a key role in where we are today and getting prices down. And of course, global trade is a really important part of those global supply chains.
Heather, in the technology industry, there are still companies that are reducing headcount. And at the same time, AI is driving a number of postings which seems to be adding to wage inflation because, frankly, the numbers are astronomical on offer to hire the best talent in AI. Does the White House have any data that shows an AI impact on the labor force and indeed the economy right now?
Well, at this moment, this technology is new, so we don't have like a specific estimate, but I can tell you a couple of things. I mean, first, this is an issue that the president takes seriously. In fact, I believe today his AI council is meeting and they're having conversations about these technologies. But, you know, one of the things that we've seen in past instances where we've seen new technologies is that people's jobs tend to change and it works its way through the system. So we expect that, you know, as these new technologies come online, that'll shift the composition of skills that workers need and how they're performing on the job. But just know that this is something that the administration is certainly focused on, as the president is so focused on making sure that we're building an economy from the middle out and bottom up and prioritizing workers in our economic agenda.
Heather Balshi, the White House Council of Economic Advisors, thank you very much. Now, coming up, Google loses its antitrust court fight with Fortnite maker Epic Games. We'll discuss what that all means for the $200 billion per year App Store industry. That's next. Kara, what you got?
Talking of app stores, let's have a quick look at what's happening in the world of Apple right now. We're basically trading flat as we do, of course, see about the repercussions of what this means, the impact of Google Play, and indeed what the read across really is for the Apple App Store as well. We're going to be digging into it so much more. Currently flat on the day for Apple. This is Bloomberg Technology.
Google Play deliberately wields monopoly power. That's what a federal court jury found yesterday after deliberating less than 4 hours following a month-long trial in San Francisco. The court fight was with Fortnite maker Epic Games, which had accused both Google and Apple of being a duopoly in the app distribution marketplace and enriching themselves by charging developers excessively high fees to list games. And Epic, reminder, actually lost its challenge to Apple 2 years ago, the Supreme Court reviewing that one. Let's bring in Bloomberg's Mark Gurman and Leah Nyland to break this all down. Outline the logic of these 9 jurors in San Francisco, Leah. What was it that they decided on and why?
Yeah, so they found that Google wields monopoly power in the market for app stores and that it engaged in anti-competitive conduct by paying different people, including gaming companies and smartphone makers, to make the Google Play Store the sole app store on various Android phones. And so it's a little bit different than in the Apple App Store. You know, in the Apple case, you know, Apple does not allow any other app stores on the phone, and that's long been its policy. In Google, you know, there were all of these payments, some worth a significant amount of money. They were paying Samsung as much as $8 billion over 4 years to ensure that the Google Play Store really was the best and most accessible access point for people using the Android phone. So, I mean, those payments are really what people think convinced this jury that, you know, Google is a monopoly, whereas in the Apple case, they didn't really have any of that type of evidence.
To that end, though, Mark, the read across is clear. And already, actually, we've seen both Alphabet and Apple having to think about the business model and ultimately how it evolves. Does it change from here on out on the back of this ruling?
Oh, I certainly think so. So there was one remaining point in the Apple case with Epic Games, and that's heading to the Supreme Court likely in a few months now. And that is steering, right? The ability for any app in the App Store to point a user to the web to complete a transaction. That means the user wouldn't have to use Apple's billing system, therefore saving the developer between 15 and 30% off the top in terms of that Apple revenue share. And now that this jury sided with Google, potentially that puts this idea in the heads of the decision makers, the lawmakers on this last point, to side with Epic Games and against Apple in this case. But there's a couple things that I want to outline here. I think Leia's completely right. I think this came down to optics, PR, and those side agreements that Google had with Spotify, Google, and other players to really promote the Google Play Store. For those unfamiliar, there's a fundamental difference between how app stores work on iOS, the iPhone platform, and Android, the Google platform. Android devices have supported side-loading, third-party app stores, the installation of apps from outside Google Play from the beginning, right? So the idea here is that Google doesn't necessarily have a monopoly on app stores. Google has a monopoly on Android smartphones, right? They have this ownership over the smartphones. They're paying, like Leia said, Google to promote Google Play over a Samsung App Store, right? They're pushing users towards the Google Play Store, right? So that's really the fundamental issue here. And in terms of how things are going to change, Google, they're probably going to have to allow third-party billing platforms globally, or at least in the US, because of this lawsuit, and in Europe, because of the Digital Markets Act in the European Union, they're going to have to stop those side deals. So you're going to see a lot more flattening and potentially more third-party app stores gaining traction on Android. And on the Apple side, outside of the US, in the European Union, you're likely to see the same thing kick off in March.
Well, we're going to wait for the new year, but for now, it looks as though the businesses are going to have to realign somewhat. Bloomberg's Mark Gurman, great breakdown there. Leah Nyland, as always, we thank you so much for the expertise. Meanwhile, coming up, we'll discuss the state of the chip industry as the Commerce Secretary warns on delays. Details ahead. This is Bloomberg Technology.
Okay, time for Talking Tech. First up, Sam Altman is back on the conference circuit and touting AI's benefits to humanity. In his first public appearance since Altman regained control of OpenAI, the CEO appeared at a forum hosted by Operation Hope to discuss AI's advances. He announced that he and John Hope Bryant, the founder of the Hope organization, will co-chair a new AI ethics council based out of Atlanta. Plus, the world's most valuable chip maker, NVIDIA, has become one of the leading investors in AI companies. That's according to estimates by Dealroom. The chip maker participated in 35 deals this year, almost 6 times more than last year, making NVIDIA the most active large-scale investor in AI in what was a banner year for deal-making in the sector. And speaking of NVIDIA, US Commerce Secretary Gina Raimondo says the US is looking into the specifics of 3 new AI accelerators that the company is developing for China. The announcement comes after vowing earlier this month to restrict any new chips that give that country AI capabilities. Caroline.
And let's stick on that one with the Commerce Secretary Raimondo, because also she's warning that US efforts to build out the domestic semiconductor industry could be delayed by years if companies are required to go through standard environmental reviews. Joining us now is someone who knows the space very well. Ben Glicklish, he's the CEO of Element Solutions, which produces chemicals in almost every EV, but also in smartphones, computers, and you develop the next generation chemicals that are going to enable tech advancements. And Ben, to that end, how much is there a local domestic supply chain issue from an environmental perspective as well?
Yeah, so there's been a significant ramp in investment in semiconductor capability in North America, but it's a muscle that we haven't flexed in a long time. And so we are seeing the supply chain bump into some issues getting capacity online, but we're confident that it will come online, and there's a real need and capital behind it.
There's just an absolute obsession with GPUs, H100, AMD's out with MI300X. Less discussion about the infinite list of other chips and the raw materials needed to support that infrastructure build out. What is life like for you? Are you through the chaos of 2020, 2021, where there was a real chip crunch industry-wide?
Yeah, so the semiconductor industry has been through real volatility in the past several years. There weren't enough chips, and then there was a big stockpile, and so demand softened and capacity additions were slowed down. It's been a roller coaster. We're fortunate to see demand recovering, semiconductor fab utilization increasing, and our business is very well poised to benefit from that. From an Element Solutions perspective, we sell very small quantities of critical materials, process chemistries that are used in the fabrication of semiconductors and printed circuit boards and the assembly of electronics hardware. Fortunately for us, we have ample capacity to meet the increasing demand that we expect next year and for many years in the future.
You touch so many end markets, smartphones, electric vehicles. Are you so far kind of upstream that you don't have the sensitivity to pressures on the end market, or are you recognizing some pain in the consumer?
So our business is unit driven, right? And we've been living through a very significant drawdown, one of the largest drawdowns in the smartphone market in its history. Similarly, in the semiconductor market, the automotive market was soft for a period back a few years ago. We're starting to see that recover. What's great for our business is that we're driven not just by units, but content per unit. And as cars become computers, as computing power proliferates, and as the technical requirements associated with that computing power become more challenging, that's a gain for us in terms of our volume and value in each unit and the margin opportunity associated with it.
How much of a straight line is that inevitable move towards EVs, for example? We just had Heather Boucher on, of course, from the White House Council of Economic Advisors, and we were putting to her like some of the concerns surrounding the fact that the Ford Lightning, for example, the F-150 has been cut back, the 2024 production has been cut back, and indeed in half. Is it that we will be bumpy in the road towards the shift toward EVs? What is it that you see as a key blocker here?
Sure. If you think back 3 years ago, the rate of penetration of electric vehicles to the global automotive fleet would have paled in comparison to what we've actually seen, right? So automotive electrification has accelerated relative to prior expectations, and surely there will be bumps in the road as large companies grapple with changing supply chains, but the trend is there. You know, it's not a straight line. There's volatility around that line, but the trend is very positive. And for Element, you know, we have really differentiated capabilities that are enabling the high-performance electric vehicles you see on the road today. And we get about 1.5 to 2 times the value on an electric vehicle versus a comparable internal combustion car. So we're excited by that increasing penetration, and we see a lot of opportunity associated with it.
The opportunity being, I'm sure, market capitalization boosting. How are you seeing your investor base change, Ben?
Our investor base is solid, sturdy, and very compelled by the opportunities we have in front of this company and the way we've been deploying capital in support of it. We are seeing more energy and attention towards our company from electrification, from innovation in high-end electronics. We talked about AI, or you were talking about AI earlier, and the proliferation of computing power to the edge of the network. Those technical challenges are ripe for us to benefit from and enable.
Ben Glicklish of Element Solutions, good to catch up, talk semi-supply chain. Thank you for your time. Now, coming up here on the show, could a spot Bitcoin ETF soon be approved? We'll discuss once again all that and more with Kristen Smith from the Blockchain Association. That's next. From San Francisco and New York City, this is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
I'm Caroline Hyde in New York. Let's get your quick check on the markets. It is a big macro day. We look towards the Federal Reserve decision tomorrow. We look at what the CPI print was today. Initial bit of a knee-jerk reaction to start trade after the 8:30 print, but now we've quietened down. The Nasdaq 100 taking it in its stride. We're up some 0.3%. It's basically the inflation numbers came in where had been expected, particularly at the core level. I'm looking at a 2-year yield flat. Completely 4.71, let's call it, where we're trading. Bitcoin currently off by 0.8%. We'll be back to that in a moment. But let's move on to some of the micro moves, some of the individual companies that we're looking at. Alphabet shares off by just 0.9%. Look, a legal defeat, a significant one in the hands of the Fortnite maker Epic Games. And could that rule an App Store duopoly, basically, with Apple? It generates, remember, about $200 billion a year. Dictates how we all use our mobile phones. Airbnb off by 2.3%. There's some analyst action that I want to draw a light on today, and that's why it's one of the key movers on the Nasdaq benchmark today. And this on the back of, I think it was Barclays, sort of citing some demand concerns, cautious about our ability to be traveling right now. They're cutting Airbnb and their outlook. Meanwhile, on the flip side, Broadcom is jumping on the back of Citi, rating it a buy. And that's on the potential of an AI tailwind. Of course, AI has been all we've been talking about for 2023. Back in 2022, it was all about crypto. And we're still kind of all talking around the holiday table, as it seems to have been a bit on a run, at least Bitcoin. We want to dig into that with Kristen Smith, CEO of Blockchain Association, because really all eyes have been on the price of Bitcoin, but also a lot of altcoins as well. Exuberance seems to have been cautiously creeping back. whether or not that's fundamentally driven on the Federal Reserve and inflation, but actually idiosyncratic views that we might have more institutional interest from a spot Bitcoin ETF. Is that really what's dictating trade for you?
I think there's a combination of factors. I think obviously the Bitcoin ETF, there's a tremendous amount of excitement around that. As you recall, a couple of months ago, Grayscale had a huge victory in the court that is basically more or less forcing the SEC to consider these applications more seriously. The next big sort of deadline for when the SEC might make a move around that is in early January, though it really could happen anytime. But we're hearing that a lot of different applicants are having very productive conversations with the SEC. And so there's a lot of hope and optimism that we'll get something like that done. I do think, though, also that as you were saying, 2023 was not the great year for crypto, and 2023 is almost over. I think there is this real sense that that the bad actors within the crypto industry have been weeded out, and what's left is really the focus on what the technology can do. And so we're seeing a lot of optimism, not just around Bitcoin from institutional investors, but sort of returning to the technology of crypto, what it can do and how it can improve not just finance, but the way that we interact on the internet. So very excited for 2024.
We do end up, rather than talking about blockchain and the underlying technology, we talk a lot about the trading of the assets. And just to go back to Bitcoin in and of itself, a spot ETF, are you having discussions with members of your association as to just how quickly that can actually be enacted? Say the SEC goes, go for it, you're allowed. How many days, weeks, months is it until you can actually start trading?
I think that's a little bit unclear. I think a lot of it is actually going to depend on the SEC and how quickly they move. I know that most of the applicants can turn these around pretty quickly. They have the infrastructure in place to do so. It's really getting the sign off. And so I do think that is going to be something to look for, hopefully when the SEC makes this announcement.
The fourth Republican presidential debate, they talked about crypto. Thought that was interesting.
Yes.
2024 is ahead. It seems like if 2023, the bad actors have been weeded out, 2024, the congressional or legislatory actors might come in and do something for your industry.
Yeah, no, absolutely. I think the politics around crypto are shifting more in favor of the technology. As you mentioned, we have presidential candidates that actually had a debate in New Hampshire on this issue just last night, but it also came up in the Republican debate with a question for Vivek Ramaswamy and Ron DeSantis. But we're also seeing congressional candidates include crypto positions in their policy platforms. And I think with the next election, we're going to see more candidates who are elected to Congress who have a better understanding of this technology and why it's important for the United States to be competitive with this. And so I think as we get closer to the election, I think the tide is going to turn. Certainly doesn't mean we don't have those in Congress right now that are not excited about crypto. That is natural to have, folks on both sides of the issue. But I think increasingly the trend is in favor of the technology and the community and the ecosystem. And so I think 2024 is really going to be sort of a turnaround year for the crypto industry, and we're very excited about that.
Kristen, does the Blockchain Association have a scenario for each potential outcome? So if Biden is or is not re-elected, or there is a new administration in the White House, do you see different avenues or paths forward for your industry?
Yeah, well, I think there are a couple of key factors. I mean, a lot of personnel is policy. And so the people who are appointed or nominated, I should say, and then confirmed by the Senate to run the independent agencies like the SEC and the CFTC have an incredibly important role to play. And so I think, whether it's Biden or somebody else, Gary Gensler's not going to be at the SEC forever, and so we will see some changes at some point. And so figuring out who those people are going to be is incredibly important. But, we're also looking at Congress. I think, if the Senate flips, that could have a huge impact. If the House flips, that could have a huge impact. So, yeah, we do a lot of scenario planning. But I think the most important thing that we're focused on right now at the Blockchain Association is really getting the education across to policymakers. This is an incredibly complex space. It's not something that you can talk about in one conversation and have everybody understand what the technology can do and what the issues are. And so, regardless of whether Republicans or Democrats are in control of the White House or Congress, I think there's a pathway forward to having, sort of reasonable, successful policy. And the key to that is having the right the right kind of education, and that's where we're doing a lot of our focus in 2024.
Well, how hard is that education made when one of the most powerful executives, and certainly in banking, Jamie Dimon, says he'd shut it down if he was in power when it comes to Bitcoin?
Yeah, it's interesting to see Jamie Dimon on the same side as Elizabeth Warren. I mean, Elizabeth Warren is supposed to be against the big banks, and it's very clear they're in cahoots. So I think the fact that he said that raises eyebrows among certain folks that don't know a lot about this space, because it seems sort of counterintuitive to have those two that are on the same side on this front. And so, I think it actually is a conversation starter and allows us to come in and talk about this, because half of it is getting the attention of the policymakers, and this is certainly an opportunity for that.
Certainly caused a few headlines, that one. Blockchain Association CEO Kristen Smith, always great to have you on to reflect on the industry. Ed, what have you got?
Yep, a news story we're tracking. Cathie Wood just bought close to 9,000 Microsoft shares, her first big purchase in the big tech company in about 9 months, adding to her bets on US mega cap tech firms tied to artificial intelligence. ARK Next Generation Internet ETF, which has beaten the NASDAQ 100 index this year, also bought a little over 10,000 shares of Meta after a gap of 5 months. All right, coming up on the program, there's a new satellite in town, well, in space, that can track national threats in orbit. We're going to talk with Evan Rogers, CEO of the startup True Anomaly. That's up next. This is Bloomberg Technology.
Time now for our VC Roundup. General Atlantic, the investment firm whose bets have included Facebook, now Meta, Airbnb, but is confidentially filed for an IPO itself, according to sources. The firm is considering listing as soon as next year, depending on those market conditions. Meanwhile, Changshin Memory Technologies is delaying its own IPO and will instead consider raising funds privately at about a $19.5 billion valuation. It's the latest Chinese company to call off a debut because of volatile market conditions. Meanwhile, Essential AI, it's an AI startup founded by 2 authors of a seminal research paper over at Google. It's raised $56.5 million in new funding led by March Capital. The company will use AI for corporate functions like data analysis and automating pretty monotonous tasks. Ed.
All right, let's head out to space. True Anomaly, a US startup designing military and intelligence space reconnaissance systems, raised $100 million from investors to ramp up its output of a satellite that can track national threats in orbit. Riot Ventures led the Series B round with participation from Eclipse Ventures, Acme Capital, and Menlo Ventures. Joining us now, delighted to say, is True Anomaly CEO and co-founder Evan Rogers. Let's start with Jackal, the AOV. But the system more broadly. Explain the technology to us.
Yeah, thank you, Ed. So Jackal is what we call an autonomous orbital vehicle designed to fly in close proximity safely to other satellites. It has its own onboard propulsion capability that's a chemical system and is equipped with 5 different cameras that allow us to maneuver safely and image other satellites at a high resolution, pretty much in any orbital lighting conditions, whether it's an eclipse or whether it's fully lit by the sun. It's designed at a cost point that allows these systems to be proliferated at a scale that's so far been unachievable by the defense industrial base that's been supporting the Space Force and the intelligence community to date.
So if I'm the US government or I'm Space Force, how do I get access to Jackal? How do I use it? And what are the threats in orbit that I'm trying to gather data on?
Well, the Space Force is thinking about transacting with the private sector in a variety of ways. We ultimately want to transact with the DoD in a way that allows us to align incentives so that True Anomaly can assume some of the technical risk that allows us to target margins that are interesting to particularly defense investors for future rounds. The Space Force hasn't made it very, very clear what they intend to transact on a typical firm fixed price contract where we're delivering the satellite for commercial operations or for government operations. The Space Force is working on a strategy to date to think through that, and we hope to be part of the conversation there.
One partnership you do have is you're going to ride on SpaceX at some point next year on your first mission. What's that experience like, working with SpaceX in the rideshare context to get out to orbit?
SpaceX has been an absolutely fantastic partner. The reality is that SpaceX has provided launch at a cost where companies like True Anomaly can get ready access to space at a price point that doesn't break the bank. 10 years ago, a company like True Anomaly couldn't exist because an ecosystem of capabilities and infrastructure and subsystems didn't exist for True Anomaly to have access to a supply chain that really has been matured by low-cost launch.
We're working with SpaceX and indeed, well, the US government. What is the US government as an institution like to deal with?
That's a great question, Caroline. It's a complicated relationship. The DoD really has responded very positively to what True Anomaly is building. This company was founded by 4 co-founders that spent 10 years each in the United States Space Force and the Air Force as space operations officers. We saw the transition of the DoD thinking about the space domain as a peacetime domain to thinking about it as a warfighting domain. And what we recognized is that required a new defense industrial partner explicitly focused and purpose-built for thinking about protecting the infrastructure that is in space, that we've spent hundreds of billions of dollars as the United States and allies fielding, and that really is the backbone of global commerce and intelligence. So they've responded very positively, and at the end of the day, it's incumbent on True Anomaly to demonstrate that we can actually build and fly safely the systems that we have designed.
And so really, this unnerving sort of future that you paint of war in space, is that what it ends up looking like? It's a protection of one's assets out there rather than it becoming some ultimate sort of war zone that immediately makes one kind of go to Hollywood in one's mind's eye, at least?
Yeah, science fiction is sort of a complicated set of imaginaries around this and isn't always useful. The truth is that our adversaries have spent the last 20 years building an arsenal of counter-space weapons designed to target and destroy satellites. And that puts the United States and its allies' ability to project power globally significantly at risk. And these weapons are really conventional weapons, everything from missiles that are designed to be launched from the surface of the Earth to satellites that are designed to attack other satellites. Nobody wants a conflict that extends into space. If we have to fight that conflict, it needs to be done in a way that ultimately doesn't generate debris that prevents the access to space for future generations. So we can't, in other words, have a Pyrrhic victory, what General Saltzman, who's the chief of space operations, calls a Pyrrhic victory. The ideal outcome is deterrence, where we have an infrastructure in the space domain, the ability to gather information about what our adversaries are doing, to hold them accountable so that we can hold them accountable on the public stage, understand the next generation of systems that need to be built, and ultimately deter.
Evan, this was a very oversubscribed round, $100 million Series B. I know you're yet to reach unicorn status, but what will you use the cash for? How do you grow this year?
And we're really focused on delivering against the contracts that we've signed to date. We've had pretty exceptional revenue and orders traction. We have some really exciting announcements that'll come out in the next couple of months around that. I'm focused on investing in the team and delivering the product and scaling production.
All right, True Anomaly CEO and co-founder Evan Rogers, call sign Jolly, I'm told, from his time in the Space Force. Thank you for your time here on Bloomberg Technology. Just a quick PSA, by the way. Jeff Bezos' Blue Origin is pushing to resume operations with its New Shepard rocket as soon as next week. This will end a halt of more than a year and provide a boost to the company's space tourism ambitions. The New Shepard rocket has been sidelined since a 2022 mid-flight mishap. Karen.
Big PSA there. Meanwhile, coming up, more out on, well, world coverage. We're going to space again, but this time virtually. But actually, VR is in space. Dan O'Brien's going to talk to us about it. HTC Vive and how they're helping with astronauts' mental health. This is Bloomberg Technology.
Dictionary.com is out with its word of the year. Don't think you're seeing things, because the word of 2023 is hallucinate, meaning to produce false information contrary to the intent of the user and present it as if true and factual. Much like artificial intelligence, the word is on an upward trajectory heading into 2024. Caroline.
I feel like AI has slightly dominated our lexicon of late. Meanwhile, let's get back to talking space, Ed, because missions are always physically taxing for astronauts. But those months-long trips away from friends, from family, they can also take a really heavy emotional and mental toll on one's well-being. That's why HTC Vive and its partners has sent the first virtual reality headset for mental health usage to the International Space Station. The headset is currently being used by Danish astronaut Andreas Mogensen. Here to tell us a little bit more about bridging the gap between the science and mental health is Dan O'Brien. He's HTC Vive President of the Americas. And Dan, what is complex, what is difficult about sending such equipment to space?
Well, it's actually very challenging. One, we use gravity for pretty much all of our technology on the ground. And in space, we actually had to account for zero gravity and actually have a point of reference so that we don't have things like drifting away inside of a space station. So just the technological achievement to actually send something into space like this was pretty amazing. But it's also, again, just like you said, on the mental health side, the rigors of space is actually pretty isolating, very distracting, and it's very challenging for the astronauts. They're dealing with stress in minutes, of what we deal with kind of in hours or weeks or years. So it's a very high stress environment. So we wanted to actually put this product up there so that we could measure how we can make it a more efficient and proactive environment for our astronauts.
Dan, I've spent many more hours this year using virtual mixed augmented reality with my feet firmly planted on the ground on Earth. I'm sure you have as well.
Yes.
But are there differences from the experience the astronauts go through of a virtual reality environment in zero gravity? What have they relayed to you?
I think you can look at, they're doing a lot of video experiences as opposed to something that you might be just walking around and experiencing. But you can see here, they actually do a lot of on-ground training. So here, the commander, in that video was actually doing all of the spacewalk experiences and training before he went into that environment. So what we do on Earth is the ability to actually do a lot of training, simulation with our healthcare applications, a lot of high stress training that we can use across a lot of verticals, not just for NASA, but for first responders, healthcare, defense, and education. So we actually have a lot of ways that we can use it on Earth that we can't use it in the space station, but we can actually bring those astronauts a lot of experiences that will just bring them a lot of calm and serene that they can use inside of that environment.
Dan, what's HTC getting out of sending a headset up to zero gravity environments?
Well, I think there's a lot for us to always learn. We're an innovation company that delves into hardware and software, and we have been delivering new technology for the industry for many years. We were the first company to bring you a 4G LTE device or a touchscreen device with our smartphones, and then we were the first company to bring you things like a full room scale walking around virtual environment. So for us, it's always about being the innovation leader in every aspect. And what we're learning now in space and being able to actually have an object in space, it teaches us a lot about different environments that we can actually bring a virtual scenario to. But it's also about that training and simulation. We can actually do a lot in that space station with our headset and our technology.
Leader doesn't always mean winner. And when we think of VR, AR, certainly for this year, one goes to Meta, then one goes to at least the announcement coming from Apple.
Sure.
Do you feel that market share will ultimately be yours by being a leader too?
Well, it's always good to be first, right? But at the same time, we are the reference design for so many of those other companies. They usually follow us about a year behind us, whether it comes to wireless connectivity and technology. But even looking at Apple, like their headset that they're going to announce is already behind what is actually coming out. When we look at Meta, they have a completely different business model. They're looking at the user as the product. They're looking at, selling ads in the metaverse. We're a company that actually stands for technology, innovation, humanity. So what we're actually trying to accomplish with our brand and our technology is actually bringing products and solutions that will actually benefit humanity and our users, whether they're consumers or commercial users.
Cutting in the face of Meta. We thank you for that, Dan O'Brien, really talking about the marketing landscape and indeed more broadly the landscape for AR, VR. He's, of course, HTC Vive President of the Americas. Then that does it for this edition of Bloomberg Technology. There's been a lot about space, Ed, as always.
50% in orbit, 50% on Earth. There's a lot to recap. Thank you to everyone that's listening to the podcast, wherever you're getting your podcasts, Apple, Spotify, iHeart, and we post them every day on all of the Bloomberg platforms. Really, really appreciate the feedback on that one. From San Francisco and out in New York City, here on planet Earth, this is Bloomberg Technology.